globally. But let's now talk about all of the domestic cues that you should track as we get into this fresh trading session. Nigel, Rima and Surbhi are all here to take us through the trade setup this morning. Guys, a very good morning to all of you. Rima, let me come to you first. We saw a very flat close yesterday. What should we track this morning?
Well, the SGX Nifty is suggesting a positive start, which means markets are likely to go back above that 18,600 mark. But this 18,600 to 18,700 has turned out to be a bit of a hurdle zone, a resistance level. Just take stock of the last couple of trading days, and you would see there have been 4 or 5 days that the markets have gone above 18,600 but unable to conquer it. On most days, the markets are ending up, closing at the lower end, except yesterday, where it was that late surge which pushed the Nifty towards that 18,600. So we're going to watch whether the markets can decisively conquer this wall of worry between 18,600 to 18,700. US markets, as we've been listening to, turned out to be a pretty flat close, but there the key standout was the Russell 2000 performance. The Russell 2000 index gaining 2.7%. Remember, investors were worried that the entire US market rally was driven by a handful of stocks, particularly some of these chip and AI makers. But now with the Russell 2000 index, which is more of a small cap index, doing quite well, the hope is that the US market rally is broadening out. In terms of the Asian market context, it's the Hang Seng and the Chinese markets which are doing pretty well, particularly the Hang Seng yesterday as well. Many of the China listed shares on Wall Street rally close to about 3.6%. There are expectations of some stimulus, plus US Secretary of State Anthony Blinken will be traveling to Beijing in the coming weeks to normalize relations. So a combination of these factors is spurring gains in Hang Seng and China this morning. In terms of flows, very muted, on both sides. So pretty much offsetting each other. The FIs bought 400 crores. The DII sold close to about 500 crore in the cash market. But, we're going to watch out how today goes. Tomorrow could be more of a decisive session for our markets with the policy. Back to you.
All right, Rima, thanks a lot for taking us through all of those cues. Let's also talk about the stocks that you should have on your radar. News flow is a little bit thin after the earnings season, but Surbhi, take us through what we should watch.
Hi, morning, Pavitra. As you said, news flow is a little thin, so I have a few stocks on my radar. Torrent Power, they signed an MOU with the government of Maharashtra for hydropower projects with a capacity of 5,700 megawatt. Engineers India, they get orders worth 21 crores from NALCO and JSPL. GMR Airports Infra will also be on my radar as the group announces divestment of 818,000 square feet warehouse facility located in their Hyderabad airport. Apart from this, general insurance companies will also be in focus as their monthly business data is out. So for ICICI Lombard, their May premium is up 21%, and for Star Health Insurance, their May premium is up 16%.
All right, Surbhi, thanks a lot for getting us the details on all of these stocks. Hindustan Aeronautics could also be another one to watch for on the back of that deal with GE that we were mentioning. In fact, we'll get Parikshit to bring us some more details on that in just a bit. But finally, let me hand it over to Nigel, who is looking at all of the cues from the futures and options space. Hi, Nigel. What should we track?
Well, morning. Last evening, in fact, in the final hour of trade, we saw a bit of an uptick, but that was because the financial Nifty Services Index, that played out expiry. You pull up the intraday chart, that'll tell you a perfect picture. And that's what resulted in the Nifty moving back towards that 18,600 odd mark. One intraday indicator that I was looking at was the Nifty futures. The premium out there was more than 100 rupees. That came down to around 70 rupees. So you're wondering whether or not there was some short positions getting added. That wasn't the case, actually. There was some unwinding of long positions, both on the Nifty, and it predominantly came in from the FI basket, because the FIs yesterday, they unwound close to around 13,000 long contracts, which brings the long positioning now down to around 46%. What about the options data? Well, we have the highest open interest at around 18,600 call and the 18,500 put. Both of them have open interest of more than 1 crore shares. Also, that's giving you a bit of a range. The near-term range that you're looking at is on the downside. If you're buying closer to around 18,450, well, you're making some money. And on the upside, well, 18,670, that's been a bit of a resistance zone. Let's see whether or not we can get past that. The SGX Nifty suggesting, a bit of a positive start. The problem, though, is those deficit monsoon concerns that continues to plague. However, on the global front, now, in fact, it appears that the globe is factoring in a lower probability of a Fed rate hike, which will be good news. So let's see how this goes. But for the time being, I think the Nifty continues to remain in that 220-point range. Back to you.
Okay, Nigel, thanks a lot for getting us all of those cues that you're looking at. But with that, we are going to get into a short break on the show. Our first here. But when we return, like we were telling you, General Electric and HAL are all set to manufacture fighter jet engines in India. So we're going to bring you the exclusive details in just a bit.